What is going on, everybody? Dillon and Ben here, co-founders of PeakBot, back for another episode of Man and Machine, episode 155. Yeah, we've been doing this for a while. Let's get some music going here. Let me
Get
pull
that
that up. Sorry, what was that?
There you go. I was going to say, Dylan, how was your weekend?
Oh, my weekend was good. We hung out. We were at a friend's barbecue. Which was fantastic. A lot of really good food. Had a lot more cookies than I had imagined having yesterday. You're not gonna believe this. I came home and made Toll House cookies.
No, you didn't.
Yeah, I did.
No,
I did. I only had 1.5, and by 1.5 I mean 3. But yeah, it's a real sick weekend as for the amount of things that I ate. But it was a great weekend. How was yours?
Yeah, I mean, obviously same barbecue. Day before that, my wife and I decided to get a puppy. So
I wasn't gonna out you until you wanted to.
No, maybe I'll show her one day. Cute dog, black lab mixed with Australian Shepherd, 2 months old, and she's learning fast, which is pretty cool. It's weird.
Listen, if you're sleeping and they're going outside, go to the bathroom, then that's really loud. Then you're good.
I don't want to jinx it, but she's doing all that. Like, she's learning at such a rapid rate. I feel like I could get her to speak soon.
Okay, well, what we might have to have her do then is come on the show and pick stocks off of the new wheel watch list, and go week to week. I don't hate that idea because on the new wheel watch list, I like all the stocks that are going to be on there. I'm not going to feel bad about it.
Yeah, Roni's picks.
Roni's picks, dude. I'm kidding less and less the more I think about it.
Good content. It's good content.
Yeah, it is. That'll get some views. It's a good hook. But anyway, yes, fantastic weekend. We got a lot going on here this week. A lot happened over the last few days with the market and some political events, economic events. We'll dive into all that. On today's show, we will be reviewing our stock in real life, Hanes Brands, ticker HBI. So we'll try to form a non-financial advice trade idea around that when we look at it on the screen. It's had some it's been a busy 2 weeks for that stock when looking at the chart here. So we'll dive in deeper. Additionally, we're going to be going to the bot shop and learning a little bit more about our Shorebo strategy, which has been the leader in the clubhouse since the end of June. Just been a fantastic strategy based on the opening range set in the first 15 minutes of the market opening, and then a breakout of that orb is where we would take a trade with that bot. So all that and more on today's show. So stay tuned. We'll likely talk about what bots we'll be trading this week, what might be causing the bots to sit out, if there's any economic events scheduled. And obviously we'll have to see how the market reacts, if there's any delayed reaction to the Donnie and Vlad meeting at the end of last week. Now that you said that, or somebody said that, I can't call them anything else other than Donnie.
Yeah, well, I actually have no idea what the outcome was.
Truthfully, all I saw was the TikToks about how Trump just kind of flexed on him with the B-2 bomber.
Oh, yeah, I did see that.
That's about all I saw, to be honest with you. I was focused on having a relaxing weekend, not thinking about potentially the most terrifying thing ever. Okay.
Yeah, we've only got a few more summer weekends left, which is sad to think about.
Yeah, dude,
and then you get into the fall. I forget who I was talking. I think it might have been Mark. I was talking to Mark last week about fall. Great season, the first half of fall.
Yeah.
Second half of fall
sucks. Really windy, just
cold,
road, wet,
no
cold.
Snow.
But you have football going for you.
Yeah, football's there.
Yeah, but
Jets baseball's
Giants
over.
Baseball's over. I think this will be a good MLB playoffs this year.
I hope so.
I think it'll be good. Last thing is Jets Giants. Ben's a Giants fan. I'm a Jets fan. Both terrible things to be. What is it? Jackson Dart? Are we in?
I'm in on Jackson. Listen, I'm in on anybody but Daniel Jones.
Yeah, that's fair.
Who, by the way, looks like he's going to be the starter in Indianapolis to start the season.
Ridiculous.
Crazy how that worked out for him.
Yeah, it's crazy time for the NFL. All right. Let's get into it, Ben. Let's get started with the
HBI.
HBI.
What does the I stand for in HBI? Is it Hanes Brand International?
No, I have it right here. You want?
Yeah.
I mean, there's only one other guess, and you're going to be right.
Hanes Brand. I don't know.
Just like think of like a word for company at the end, like that starts with an I,
Inc?
like
Incorporated.
Yeah, exactly. Okay. HBI, Hanes Brands, which Hanes Brands, one word.
Brands.
Hanes Brands, one word, no space.
That's one word. That's like PeakBot, one word.
Yeah, but Hanes Brand's been around longer. The whole one word thing wasn't popular back then. Let's dive into it. I'm going to look up the IPO date. Ben, any guess on Hanes, and then we'll get into our experience with Hanes in real life.
I feel like Hanes was a product of one of the wars.
Really?
Yeah, I just feel like, because there has to be mass production of like clothing to send over. I'm going to say somewhere around 1942.
Okay. Let me just confirm. I've got one answer here. Let me just see. You're way off based on what I'm seeing, but I'm getting a September 6th, 2006.
Okay. Well, okay. Maybe that's when they IPO'd. When did they actually begin as
become a company? Okay. Yeah, I did want to say. I did say IPO. That's what we do on this show every week. But all right, Hanes Brands founded when? Let's see. Okay, 1901. Were we coming out of any wars in 1901?
No, that was before World War I. So
things were probably pretty good. Turn of the century, we survived. Yeah. Okay, so yeah, founded in 1901. It was initially established as two separate companies: the Hanes Knitting Company, founded by John Wesley Hanes, and P.H. Hanes Knitting Company, founded by a guy named, or gal, I'm not sure, Pleasant Henderson Hanes. Pleasant was the first name.
Pleasant Henderson.
Yep.
P.H. Hanes.
That's right. That's a
publicly
cool name. Traded, officially formed in 2006 through a spin-off from Sara Lee Corporation. Sara Lee is
like the bread?
Yeah, or the bread. Yeah, they make. Yeah, okay. Lot going on here.
Are you a Hanes guy? Are you a Hanes guy?
Okay. Yes.
Yeah.
Yeah. I'm wearing Hanes right now. I'm wearing Hanes underwear right now. I think I'll be talking about my underwear today. But I have been pretty brand loyal to Hanes since I've been an adult. I'd like to think. I'd also like to say that when I was, I guess, at a point of making my own decision as to what underwear I was buying, Michael Jordan, was it Jordan with the Hanes? No.
Yeah, Jordan, tagless, the tagless shirts.
And they didn't slide up, like the underwear. Yeah. That was like their big thing on Hanes. They didn't ride up.
Yeah. Oh, Michael Jordan, he was all over. He still wears Hanes to this day.
Yeah, sure he does. Yeah, no, so those commercials were huge. Like maybe in some struggling post-college years, I got on the Fruit of the Loom train or whatever was on sale, and I regretted it. You can tell. Oh yeah, dude.
Fruit of the Loom I'm a Fruit of the Loom guy.
Are you really?
They've stepped up their game, man.
Okay, so I'd be lying if I didn't say I had maybe one or two pair in there of Fruit of the Loom, but yeah, I would like to think that even though Fruit of the Loom, really quick, isn't it one of those logos that, what's the word where you thought something was there and it never was?
The Mandela effect.
The Mandela effect. Doesn't Fruit of the Loom have one with the gourd or whatever?
So in the logo, you mean?
The logo, yes. If you've ever think about the Fruit of the Loom logo, okay?
Yeah.
And I'm going to put in the Mandela effect. I know we're getting off topic, but that's okay. Yeah, see, this is what I find. And people then say that this gourd was never there.
This.
Correct. Yes, exactly that.
I think the word for that is a cornucopia.
Cornucopia. Sure. I thought it was a gourd, but it's not. It's a whatever it is. He was never there. People are saying that's fake. Like that was just it's if you check any logo on any Fruit of the Loom anything, you'll never see that.
I don't know. Look at this.
That's fake.
That's fake?
That looks pretty real. But keep away from fire. I don't know if any of my shirts say that. But anyway, so I had to bring it up. We're getting off of Hanes, but that's my fault. Let me say this. I think Hanes has a pretty good corner of the market, at least in the men's undergarment section. I guess Fruit of the Loom making a comeback. Can you name one more? Like I couldn't name one more. And I'm only sticking to underwear. Yes, Hanes has the undershirt. I'm not an undershirt guy. When I would buy the I can't think of an appropriate name for the undershirt tank tops to say here live on air. I've got two like not favorable names for those. You know what I'm talking about?
Guinea tees. Yeah, just go with guinea tees.
Or the other name's even worse.
Yeah, guinea tees fine. We're both Italian, so it's fine.
Yeah, okay. We can get away with that. All right. Hanes, if I was wearing a guinea tee back in the day in high school, Ben, like when we were doing the Chief line at football games, those were Hanes. Hanes guinea tee.
Oh yeah. 100%. I just Googled other men's underwear brands, and I don't know. Nothing really.
None of them, right?
We got Andrew Christian.
Never. That's got to be rich.
I don't know.
These are very high.
Berlin. Calvin Klein.
Okay, we're idiots. Yes. Yeah, but see, we're not thinking Calvin Klein.
No.
Calvin Klein for sure. Are any of those publicly traded? Is Fruit of the Loom publicly traded?
I don't know.
Fruit of the Loom publicly traded? Question mark. No. Privately held company.
Tommy
owned
John.
By.
I've heard of Tommy John.
What? Oh, I've heard Tommy John. Yes. Who do you think Fruit of the Loom's owned by the way?
Okay, so they're owned by a bigger company.
Arguably the biggest.
It's not Hanes, right? Hanes doesn't.
No, it's Berkshire Hathaway.
Oh, okay, yeah, that makes sense.
All right, so let's get into the stock then. Unless you had something else.
Nah, let's do it.
All right, so what? By the way, what are these EMA lines? What do you got on here? What are these extra lines?
Oh yeah, these are the 9 EMA and 21 EMA that we're doing for a strategy that we're building here. I'll turn those off.
Oh, geez, sorry. Some action as of late, as we can see, but look, I guess we're zoomed out here. What do we got on screen? So
look at that, man.
Yikes! Oh
Hanes
man,
has not been doing well, man. Maybe other people are switching over to Fruit of the Loom like me.
Yeah, I guess so, man. So Hanes. It seems like they've had a steady decline since, call it 2015. Yeah, March 2015.
Yeah.
Maybe.
Wow.
And a little bit of then we head into COVID. Big crash, resurgence with COVID, a little bit of life.
Yeah, but you know what? The COVID crash here doesn't even look like out of character for this stock.
No, it just, there was a couple.
2018, we had that dip back in December. This followed the dip. Yeah, I mean, it's a rough life for Hanes investors.
Who knew? Yeah, there was a little bit of excitement maybe in 2024, stock went from 379 all the way up to 860 at its latest peak. All right, so from December of 23 to December of 24, stock more than doubled. Okay, that's fun. That was fun.
Yeah, this was a fun run right here. I mean, it looks like it looks like we bottomed out at around $4. Dip a little bit below $4 every now and then, but bottomed out, recently hit it just a couple days ago. It seems like, and then shot right back up. I mean, that's fun.
These are some
great earnings.
I'm actually going to look at the earnings. Oh yeah, so it looks like on August 7th, their actual, and I'm just doing they beat earnings by about 35%.
Yeah, look at
expected estimated earnings. Yeah, that's great. Okay, so good for them. We're on the comeback.
Yeah.
You want to know what the problem is? This is gross. And then let's talk about why this came on our radar. One of our partners, Squeeze Finder. I'm sure this is on their radar, and maybe even some traders took advantage of these late spikes here. Ben, you want to know why I think maybe Haynes is on the down low?
Because Michael Jordan left him in 2021.
No, because men don't buy new underwear enough.
That's true. That is so true.
I'm just being honest. I'm just saying it. Man, I mean, I'm not going to out myself and say the last time I purchased underwear or underwear was purchased for me. I'm not going to do that here live on air because I have too much respect for myself. But I think generally speaking, men don't buy underwear enough.
I could back you on that. I'm not ashamed.
Yeah, okay, good. Do you remember boxers before boxer briefs?
Hold on. Doug's tracking me up.
Yeah. Thank you, Doug. Thanks for being one of us, man. Now, I will say, to take the attention off me and Ben a little bit, 20 years is a little crazy, Doug. I would have lied. 10. I would have said 10. But if you got Hanes lasting 20 years with no holes in there, hey, listen, keep them clean.
Yeah.
So what do we think's going on? So we got a big earnings, and these are daily bars we're looking at, yeah? So we've had, when did this all start? It looks like on the 7th. So 2 Thursdays ago, not last Thursday, but the Thursday prior, had a huge jump. And I was talking about Squeeze Finder, Ben. I don't know if you have your account up. I'm curious to know if Haynes and HBI is on the Squeeze radar right now. And if not, that's makes sense too, because it already has.
I was just pulling up my Squeeze account here, which, by the way, this bot is a ton of fun.
I'm going to get the link on the screen here. Hold on.
Yeah, get the link on the screen. Sign up. Try it out for a month. If you don't like it, it's 30-day money-back guarantee. But this is a fun bot. I was just looking. I went to add new stock, and this list updates, I think, every 30 minutes. Oh, yeah, it says right there. Updates every 30 minutes. At 15 minutes and 45 minutes past the hour. HBI is not currently on here. However, it will likely find its way onto this list just due to the criteria that the list updates with. Those couple of gaps that we just saw. I mean, those are going to light this stock up like a Christmas tree for this indicator. Yeah. I'm actually, while I'm here, I'm just going to add these stocks for myself. I'm going $400 per ticker, budgeting on Squeeze. Squeeze has been going pretty well for me. I'm just kind of casually doing it, kind of putting $400 in. You could go up to $2,000 per ticker. But I'm throwing a couple $100 on per ticker.
Are you selecting the top 100? What are you doing?
Yeah, I'm selecting the top 100 usually. And then I'll just scroll through and I'll make sure that I like, or I don't make sure I like every ticker. I should. That's what everybody should do. But I'm really looking to make sure that I don't dislike any ticker.
Yeah.
Right. So I'll do it after the show, but I'll casually just go through and look at that. But yeah, Squeeze has been good. I don't even know what my quarterly looks like. All right.
Pretty good.
Pretty good quarterly P&L.
I mean, look, it's meant, at least the way we've handled it, small part of the portfolio, right? This is more so appropriate for the name of the show, more of a man and machine strategy than others. Not to say it can't be fully automated. But if you get into a position on a stock and it doesn't squeeze, oftentimes for about a week, Ben, did we make the update where the bot will exit the position after 7 days?
Yes. And okay, I think our quarterly is off because it was showing dates from May, but we'll get that fixed later.
Okay. So all that to say is if you enter a position, if the bot enters you in because all the criteria is met and your trade is triggered, if the stock for some reason or any reason does not jump, does not squeeze, and there's not a huge pop, then you'll stay in the position for up to 7 days. And Ben, correct me if I'm wrong, oftentimes you can be sitting on a 5% gain, a 12% gain. When you think about the dollars and the cents of things, maybe not all that exciting on some of them. But when we think about an ROI from a percentage standpoint, these are unbelievable trades that are kind of just sitting there and didn't pop. Let's grab the quick gain. So you can go into your Tradier account or whatever brokerage account and exit manually if you don't pop. Otherwise, after 7 days, it'll just close the position where it is.
Yep.
Ben,
No,
go ahead. Sorry.
I was gonna say it's definitely a fun bot.
Absolutely. Now, good.
I think Haynes will pop up on the list. We've got a gap to fill here as well. Pre-market, we're kind of sitting where we closed. I mean, we've got this gap. Call it to 725. Just call it 725 to fill. So we could potential move here from 644, call it 650 to 725, a nice 75 point gain on a $6 stock, $7 stock. That's a nice 10% bump. You can see it.
All right, so maybe some
opportunity. The thing about squeeze is you're throwing a lot of darts out there. They're not all going to hit, but when you do hit one, like I've caught a couple 50% plus gainers. I think I caught one 100% plus gainer. Those are real fun.
Coles. The ones that come to mind, Coles was awesome. I was at the ASTS stock.
Open Door last week did well. Open Door was like a 30% gain.
It's just so different from the type of trading that a lot of PeakBots traders are used to doing, right? Selling options versus trying to short squeeze the stock on the equity side. And it's a great complement to the portfolio. So Ben, I guess what we're saying is for a trade idea here is maybe a gap to fill up to about 7.25. And maybe it will arrive on the short squeeze on the squeeze bot watch list. And that's the trade idea. Let it do it automated. Okay, cool. Well, that's the stock in real life. We spend more time on that than we would usually, huh?
I think so.
We got a little distracted, but that's all good. Why don't we do this? Are we heading right into the bot shop? Is there am I missing something? We're not doing trader trivia. That's Fridays.
Yeah, that's Friday. We could head into the bot shop.
Before you do it, let's talk about Shorbo and the results it's been having as of late. And then we can learn a little bit more about it because people want to know both. They want to know everything. So here's how the bot's been performing. This is our short orb strategy, hence the name Shorbo. All right, this is August, up 5.4%, equal to $540 per contract. PeakBot subscribers on PeakBot Pro are able to trade up to 2 of these units per day. Okay, so bot was on quite a hot streak here. Okay, from the end of June here. Now, although June was a slightly red month, down 3.6%, you can see end of the month it got really hot. Exited June about $300 up in the last week there. And then a screamer of a month for Shorbo in July, 7.1%, made over $700 per unit. Okay. And then August, it's we'll call it off to a great start. August is, I guess, more so over than it isn't. But 2 losses at the beginning of the week last week, an ugly one on Monday there. Was that a double loss?
No, that was a single. We got in late in the day. It was a trade that I wish the bot would not have taken, but bots do what bots do, right?
It was right at 12, wasn't it?
Right at 12. Only got $80 of credit. It was right before a drop back down. Yeah, I was not happy with that entry, but the logic is the logic.
That's right.
Dillon, we got a question for you to answer.
Oh, yes. So Doug, great question. A lot of people ask this. Can all of these, we'll call it next gen, all right? So King Condor, Shorbo, BenBot, and even the Wheel, they can all be traded in the same account. There are some things to be, wary of, if you will. One thing is that King Condor and Shorbo both trade SPX only. Okay, so of course the nice thing about that is everything's cash settled. There's no shares to worry about, no assignment, anything there. It's not likely, but it is possible that you get, call it, contradicting strike prices. If say, for example, Shorbo was in a position and then King Condor was to enter and it had an identical and/or called a disruptive strike price that does not work with the one that's already in place, then Ben, it's first come, first serve. King Condor won't enter.
The broker will just cancel the order for you, because it's likely in a case where one of the orders would create a short, usually a short call position for you. They might do it for a short put as well, but yeah, it's not going to reverse an existing position for you.
Gotcha.
So the broker will cancel it. And if you're also wondering if you could trade like our other partners' bots, like SqueezeBot, on the same account, yep, totally. And especially that one, because that's shares. That's totally shares. So yeah, trade it all.
All of it. BenBot's going to be Tradier only. Keep that in mind. Our daily covered call strategy is only on Tradier. If you have questions, let us know. But anyway, I wanted us to just show that the bot's been performing. It's our hottest bot right now. What are we learning about today?
All right, so we are back to the bot shop. Previously, we had learned about, honestly can't remember what we learned about already, but today we're going to be learning about strike prices and how the bot sets its strike prices, why we landed where we did, and compare it to different options for strike prices, different opportunities to put our strikes in different places. So we're going to look at what $20 out of the money looks like, what are the pros and cons there, what $10 out of the money looks like, and that's where we currently are, that's where we landed. And then what if we just did at the money? The way that this strategy works is we'll take the range of the first 15-minute bar. Once price breaks above that first 15 minutes, we have to have a 15-minute candle close above that range. We will then sell put credit spreads, assuming that we're going to continue with that breakout, continue with the trend. Or if we break down, we're going to sell call credit spreads. There is a VIX filter on there as well, which we'll get to on a later week. But based on that, that's how we get our entry. Now, when we enter, we've got to choose strike prices, right? And again, we landed on $10 out of the money. We'll look at the comparison between all of these. But what are the pros and cons that we considered for these different levels? So the $20 out of the money, that's going to give us the highest probability of profit, right? Because that's furthest away from us. That is just statistically going to give us the highest percentage chance to win. However, that comes with a much smaller credit. We'll look at how much smaller in just a minute, but it does impact results to a point where we felt it was material enough to say, hey, we'll lose a little bit more, so that way we can collect more credit. You know, it is going to be challenged less times, of course, because it's further out. It's got a wider gap between the short put and the short call in the case there is a reversal, allowing for wider iron condors, higher percentage chance of a double win scenario, where we can get a double win. I think we talked about that last week. But yeah, overall, the return on your risk is not as good as it is in other scenarios, because we are so far out of the money on a 0 DTE option, 0 DTE spread, where you're just not collecting enough premium to really get the most bang for your buck there. So that led us to look at $10 out of the money. You still get a really good credit. You're not going to have as much challenge as the at the money strike price. And then if you do enter a reversal, a hedging entry later in the day, you're still going to have that opportunity to have to form an iron condor and to have that double win scenario. Now, if you don't have that opportunity, the worst that's going to happen is you form an iron fly, and then you're going to lose one of the sides of the fly. Best case scenario then is if the price of SPX expires right at the sold call and put on that day, then you'll collect on both sides. Very tough to do. Those particular days, I just count those as a loss, but you collected premium on 2 spreads, so the loss is lessened just a little bit. Now, you will obviously be leaving premium on the table versus at the money, which is what we looked at next. We looked at, okay, well, if $10 out of the money does this well, what about at the money? So this is where you're going to get the most credit per your spreads per the testing that we provide, right? You could go into the money a little bit, but we didn't dare go there. If your orb breakout runs, the winning side decays a lot faster and you can realize your credit sooner. Your wins are going to be bigger because you're going to collect more of a credit. The problem is you're going to win less because you are right at the money. So even just a small move down, even just like a $5 to $10 move down, if we stay there all day, we're going to lose. So there's, as we can see, pros and cons to each. We felt like the $10 out of the money option was the best scenario for us, and not just in theory, but when we look at the actual tests. So here is our Shorbo base test. Again, this is with the $10 out of the money spreads. P&L, 18 grand. Compound annual growth rate, 39%. Max drawdown, 14%. So now we're going to take a look at the $20 out of the money.
Quick,
so, yeah.
Really sorry, Ben. I just wanted to state that the P&L, this is based on a $10,000 starting budget. Correct? Okay, so
yep.
You can see the gains there. That would be the gains on top of that 10K, and this is based off of a period of 3+ years, going back to May 22 still?
May of 2022, that's correct.
Okay.
Yes, great point. We're setting aside $10,000 of capital. It's only trading $5 spreads. So you might be saying, well, why do I need to set aside $10,000 to trade $5 spreads? Well, there are periods of time where we hit a bunch of losers. And if you didn't have extra capital in your account, you might run out.
Yes.
So we want to keep those drawdowns from a percentage basis to your total capital allocated pretty low. And then, I mean, hey, we're not going to complain about earning 40% on our base annually. So again, here is the base, decently smooth curve. There are some dips in it, but there's going to be dips in anything. Now, going on to the $20 out of the money, a little bit more choppy, but the numbers do change quite a bit. So the P&L drops down from 18 to just 11.5 thousand. Compound annual growth rate, still a good 28%. And then the drawdown is relatively the same, drops by 0.5%.
Some churn there. There's some churn there.
Yeah, there's, I mean, in these drawdown periods here, yeah, that's not.
And they're sharp.
Yeah, that's not fun. You don't want to be caught now. And look here, they're just not as sharp for the base strategy.
Do a quick flip back.
We're collecting more premium.
Bang, bang. See, this is what we need to do every week. Bang, bang, bang. Okay.
Yeah. And then, so that's the results for $20 out of the money. That's supposed to give us the higher win rate, remember. Now, the lower win rate, but more credit, more premium, gets us here. It's a little bit better, a little bit closer to the same scenario. But we see just $15,000 in our P&L. We see a 34% compound annual growth rate, which is 5% lower than what we went with. And then the drawdown, again, relatively the same, a little bit higher of a drawdown. We're losing a little bit more. That curve also doesn't look terrible. It's just, there was a period here from, what is that? The beginning of 2024 all the way until October of 2024 where you're not making anything.
Yeah. And
why would you pay for our bots if you're not making anything? You know, we want to see that in 3 months things are at least turning around on these back tests for strategies that we want to put out there. So
that's excellent. So $10 out of the money. And Ben, I was going to provide a visual since we have them now, just for the people, just to show quickly how we arrived to that price. And then we can, unless you think there's something else.
So Doug asked, what delta do 10 and 20 out of the money strikes typically have? So the $10 is typically
40.
I mean, it's going to depend on the time of day too. So this will enter at some point between 10 and 12, around the 10 to 11 range. Yeah, it's around the 40 delta. And then the $10, I would imagine the $20 out of the money, I haven't been paying as much attention to that, but I would imagine it's like the 30 delta if I had to guess. Again, based on the time of day and volatility. It is, I think, our only bot right now where we don't choose strike prices based on delta.
We're just going straight $10 out of the money.
Just going exactly like you said, it's straight $10 out of the money.
So here's what it looks like. Ben, I'm going to pull yours down and then pull this up. All right. So when we're talking about selecting the strike price on Shorebo, this is just an example from a chart on TradingView. So we can see this was the top of orb, and on the second 15-minute candle of the day, closing at 10 o'clock, this is an actual trade from back in July. We broke orb here. And if we can see, if we were to hover over that, we would see that this was the closing price. So of course we want to get to a round number. On SPX, the strikes are every $5. So we're going to round to the nearest $5, which means in this scenario, we're actually rounded down to 370. Okay. And then we're going $10 out of the money from that. Okay. So we get our number rounded, then we go $10 out of the money. And this is a bullish entry, meaning it's a sold put, and we're going to be $10 below that price. So we can see this is where we broke orb. We rounded to the nearest $5 and we went $10 out of the money. So this orange line here is at 63.60. This represents the price that we now want to stay above for the remainder of the day in order to be a winner. Okay, so our profit zone is vertical here in the green zone, just trying to stay above our price. So you can see in that scenario specifically, the bot won. Okay, entered bullish. It wasn't necessarily bullish all day, right? But the point is, all we needed to do was stay above this price. For those of you watching this trade live, that when it happened, Ben, I remember you weren't, but I was, and I was freaking out. And I was like, oh no, we are not running away right now. But you can see we closed probably at 263 and change. I'm sorry, 363 and change. And that's all we needed, won $113 on that trade. So I just wanted to give people a visual of what Shorebo looks like when it enters.
No, that was great. That was great. So those are the strike prices. That's how we get to our strike prices for Shorebo. It's a set dollar amount. I'm going to say we don't do deltas because sometimes the deltas got us too close to the money. Like seriously, it was like $5 out of the money, and that was too close to that at the money scenario that we didn't want to have.
No, didn't want it. And of course, it'll do the same thing on the call side visually, right? If we were to break down, we're going to sell the call $10 above where we're at. Okay.
Yeah. So next week we'll be talking about the spreads. The $5 spread. We'll compare a $10 spread, and we'll compare maybe a 15 or a 20. We'll see what looks good. So we'll take a look at, IV will widen or narrow the deltas. Yeah, there's just certain scenarios that we saw that at least I personally didn't like from using deltas. I feel more comfortable with the $10, and it's also on a break of orb. So it's a momentum based strategy. You got to assume that there's some momentum going into the break of orb. We've just been doing this for long enough and have seen too many orb strategies that have been winning to not hop on the orb train.
Yeah, and if it ain't broke, don't fix it. Right now, it's performing well. So we'll always keep an eye on it, though, as market conditions change, things change. But anyway, that's Shorebo. So Ben, we're nearing the end here, I believe. Let's tell the good people about maybe what to look out for this week. What's on the economic calendar this week?
Yeah, let's pull it up. You could always check this at any time. You could just go to TradingView and look at the economic calendar on TradingView. I'll pull up Financial Juice in just a second. But we've got nothing much going on today. Nothing much going on tomorrow. We've got a bunch of stuff going on Wednesday. Oh, no way. Oh, okay. So this is FOMC minutes on Wednesday. I was going to say, we just had FOMC like a couple weeks ago. And then we start the Jackson Hole Symposium, which is several days. And we've got Powell speaking. So the end of this week gets a little bit murky in terms of economic events, what we want to trade through, what we don't want to trade through. The Jackson Hole Symposium doesn't typically move things, I don't think, too much. I'm going to go back and see what happened last year. But Powell speaking is a red flag for us. We don't want to mess with that. We've got FOMC minutes, which I think we might trade through that. there hasn't been a lot of action on FOMC minute days lately. The 20-year bond auction will make Max's bot turn off. So it'll be off for that. But other than that, we've got a pretty solid beginning of the week here, in my opinion.
Yep. Some opportunity.
And then we double check these things on Financial Juice. This is a new website that I really like using because it also shows some political events on here. Let me figure this out. There we go. I do like to check this just to make sure everything matches up. Oh, and they do show like big company earnings, like we didn't see on TradingView. I mean, if you looked at the earnings calendar, you would see it, but Alibaba, Walmart.
You're saving me right now, Ben.
Yeah, Walmart, right?
I got Walmart wheeling in another account. I'm taking it off.
Yep.
Thank you, Financial Juice.
Yeah, so that's what I like. I like to look at Financial Juice for these things. Cool. Man. All right. That's about it.
By the way, we're ghosts.
Oh, no, we're gone.
Oh, no, this is too big.
No.
By the way, I think we do have to get more into like this frame, though, with the big screen share. I do think that that's going to be better in the long term. Well, we'll have to adapt. But anyway, all right, let's get us back at centered here. I just want everybody to know that since I'm checking my account to make sure that I do not own the shares of Walmart and that I'm turning it off to trade through earnings, just know that Walmart's going to have great earnings. Just know that it's not like I'm hurting myself too much outside of the premium I would collect, right? But yeah,
not worth it to trade through earnings. Not that strategy, at least.
Nope. All right. So there you have it. Early week, some opportunities. Back half of the week, some things that could rock the market. We'll have to just wait and see. You ever been to Jackson Hole?
No, but I want to. I want to go one day.
It's not. I was underwhelmed. Maybe I didn't do the right things. Maybe I wasn't there long enough. But it's just like kind of a slow. I mean, a lot of great bars if you're into like the country dive bar scene, like type of thing. But anyway, all right. We will be back Friday at noon Eastern, not 11:55. Noon Eastern Friday for the automation station. Thank you so much for tuning in here today. If you need anything, find us at PeakBot.com. Use the chat feature and get started on PeakBot Pro. Access to all of our bots. Thanks so much. We'll see you at the peak.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.